Hello, traders. How are you? Welcome. Anna Shields here. How are you? Today is Friday, 4/11/2025. Doing a live market analysis on Bitcoin. So let's go ahead and get right into it. Just going to make sure I'm all set up here. Okay, this is going to go ahead and just going to do a quick mic check. Make sure this is working well. Okay, good. Everything looks good. All right, here we go. So here is Bitcoin traders. It's been a minute since I've been live, but that's okay. I'm not going to get caught up in it. Let's just get right into it. I'm on the 1 hour for Bitcoin, and a lot of things have been going on. As you know, with the tariffs, news announcements, goodness. So we're at 83,973. 80,000, 83,971. Wow, that's a lot. So let's go ahead and go to the day time frame and see what we have on here. Don't mind me, traders, if there's some information on this chart that I have to hurry up and take it off because I believe I was able to get everything updated, but maybe some stuff was off. All right, let's go ahead and look at our day. Let's look at the day. What I would like to do is, I knew that sucker was going to go down to 75,000 too. I don't know how many of you had a trade down there, but a great entry for us. So let's go ahead. I'm going to just go ahead and do a top down analysis. I'm going to first put her on lines for the chart. And let's see what's going on here. I'm going to go ahead and do a parallel channel. Find out where she's at in the channel. This would be considered a descending channel, which also means, the market's moving down, selling down. So here we cliffed off at January 21st as our high at 106. And then just 4 months later, goodness gracious, we're down 31,000 points. Whew. Goodness gracious, great balls of fire. Let's go and what I like to do is I like to name these channels. I have another chart my gosh, I've had it for like 4 years and has all of my channels, my fibs, everything all organized in here. So as we're on together, you'll see how I'll build that out. I actually might even have it in here. Let's see. Yeah, I'll have to look at that later. But let's go ahead and identify that. So that what I do is I look at the top of the peak right there, the high. That was January 21st. If you look towards the bottom, you'll see that. And what I do is I rename it. So I name it at that high. So it was 21.25. Oops, 25. It was a 4 hour. Oh no, this is the day time frame, and it's a descending channel. And you'll see, like I said, as we work together and I do these live analysis, we'll build this out. in our object tree. This is TradingView's object tree. So it just is an area in TradingView that allows these what would you call them, elements, um, to be placed and organized, these objects. So that there, what I do here too, I forgot to say what I was doing. I'll rename it the date that the peak started so I can find it quickly. And then in parentheses, I put the day I made the channel. Okay. So now let's see where she's at. Oh, she's at the top of the channel. That's really nice because we could go ahead and sell down to the bottom of the channel. My traders that I work with, especially one right now, I was teaching him that, you're at the top of the channel, it can come down, play around, and then you can go ahead and sell it down to the bottom. So right now we're at a great entry. We're at the top of our channel. So that's wonderful entry. Put your stop loss right above here. Put your stop right above there, and maybe this here is the 200 EMA on the day. So you could put your stop loss right above there, or you could put your stop loss. Whoops, I don't want that. You could put your stop loss right at the top of the channel too. Oops. You could put it at the top of the channel as well. Your stop loss. Whoops. Stop loss. You could put them anywhere there. Okay, so I'm just going to go ahead and run through this as what I see for Bitcoin and how I trade. I do want to write that down though. I do have an actual write-up of the information that when you do a technical analysis on an asset, that you're identifying all the different confluences that will tell you, hey, this is a good setup. They do usually teach traders to have at least 3 or more confluences that are all in agreement. And I just want to look at my phone real quick because I want to find out something. Let me see. Bear with me. I'm just looking up just one thing, just for a second. Okay. All right. So, some traders, they want to have, let's put this over here, confluence. Confluence. Another way you could say is like a combo of technical analysis agreeing with the move. Let's see if that will wrap. Also, if you want to learn how to use this, you can text wrap it, which I'm not sure why it didn't. Confluence analysis technical. Wonder why that didn't move it down. Usually the TradingView will wrap that right here. We want the wrap. Oh, why it's not wrapping. So if it doesn't wrap, then what you do is you click on it and then you just go like this, make it break up where you want it to break up. Huh. There it goes. I was like, what? All right. So confluence. Maybe we need to make that in, yep, we need to make that in black. Let's make it a little bit larger too. I'm checking my other feed so I can see how it's coming, how you guys can see it. Okay. Like a combo of different types of technical analysis that traders do that can agree with the move. You know, that there's like an overlap going on. Okay. So, let's see what else. All right. So we're at the top of the channel, which is beautiful. So I would write that down. Let me go ahead and do that. The only thing with, no, I'm not going to go ahead and get caught up in that. Okay, so we're at the top, and how far back down to the middle? Because this middle area price will bounce at 7,000 points. Not bad. If you have some type of sheet that will let you know whatever size you use, you can then quickly look at your sheet to see what kind of move that is. That's 7,000 points. The one sheet that I have that I'm looking at right now goes up to 1,000. Not really that great for what we're looking at. But if you were, this actually is a great setup because you have very low risk. I mean, you're going to have some risk, but it's very minimal. Okay, so if you put your stop above the channel, which I would also put it above the 200, let's see how many points that would be. Gosh, this is a good entry. It's only 1,500 points. 1,500 points of a pullback. Let's look at the health of that candle. Nice strong candle. The purples are the buy candles and the whites are the sell candles. I'm going to put that down. Okay, that seems to be big enough. All right. So that's a nice, strong, healthy candle. You could go ahead. We have 5 hours left on this candle to see what she does. So maybe you might want to wait to do that before you take the sell. See what she does. Up to the top is 1,000 points, 1,776. Not bad. Heads up, the anchor text tool will be removed soon. Use the text tool with the anchor option switched to get the same results. Well, that's good to know. TradingView is getting rid of the anchor option and just use the text tool and right click. I've seen that. Okay. Let's see what kind of momentum we got going on. Up, still buying, still buying. So we'll see what she does at this zone. We still got buying momentum going on. Now I'm going to look at price structure. Look at all this. Buy, sell, buy, sell. That's all in March. Okay, so let's now do a fib. Let's now do a fib. See what this looks like with fibness on it. Those that are advanced traders, you'll have an idea of where the fib lays since we have this channel going on. So I'm going to go ahead, when I make my fibs, which is another word for Fibonacci, is I put them on lines. And we can do two ways on this fib. We can do two ways of this fib. So this would be more back in March 10th. This is more to me of a week fib or a month fib. Okay, so I'm not going to start way back here. Actually, it wouldn't make sense anyway because this is lower. But what I'm going to look at is I'm going to do a high to low fib. Okay, there's several different there's several different identifiers here for you traders to look at. Let's see. It's been a minute since I've gone live, so you'll have to forgive me. So here we're going to do a high to low off of here, okay? And always good to be organized, traders, when you're trading. So I have a high to low fib on the day. So I have a lot of templates already made here. I just look high to low and then I find the word day. Dun, 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 dun. There it is. And then what I do here is I'm now going to make this 14. My eyes have changed. All right. So now what I did here, traders, is let me zoom in here. I haven't used that zoom in tool in so long. All right. I get a little careless in the very beginning years ago. I would be on it. So you want to make sure that you are starting your fib right on the peak. Okay. Then you want to lock it. And then if you hit the zoom out button, it'll zoom you out. I didn't think it was going to zoom me out that much. All right. So we have the high to low fib. So what we're doing is we're going like this. Oops. Close that all up. We're going high. This is where the market started, the highest point, came down, and then pulled back, and now has gone up to the heartbeat zone, which is right here. So what this whole thing means is the market has to breathe. Just a moment. Just a second. Okay. Oops. 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 That's not too happy, is it? Okay, it's not doing what I want it to. Okay, so what I want to say to you is that the market needs to breathe. So, you know, actually, it's kind of hard to explain this with I'm looking at the chart and you're not you're not seeing it. Okay, just a minute. Okay, here we go. Um, here, okay, the market came down. Bitcoin sold, selling down. Now, for this is considered a retracement. So the market pulls down and then it needs to come back up. And so there's different terms that the market and traders, you'll hear how they explain this type of market movement. Okay. They will use different terms for this type of market movement. This technically, by technical terms, is called a retracement. And what the fib levels do is they let us have an idea about how much the market should pull back. Now, why is the market pulling back? The market's pulling back just because that's how the market works. But more than that, is it gives opportunities for other players to get in and take the move, work with the market, trade the market. It also is with banks, big money in there. They're looking to get in and put in their orders at a price that they want. It pushes the market back up, able to get profits, and then they can go ahead and enter in more orders. Um, it also is the market needs to breathe, right? So it has different sections. So it'll go down, and this is where you get into market cycles where the market will go down, it will pull back, go down and pull back. Then that also leads into how much of a pullback on just a, or how much of a run that would be on. Then you fall into your legs concept. Your legs being, if I put this on candles here, we have off of a nice run, you normally would have about 3 to 5 bars. This is a huge bar, so that like equated to probably 2 or 3. So, but we have 1, 2, 3, 4 bars on this run, and then before it pulled back, now we have 1, 2, 3 bar pullback. So you can run into that concept as well. So there's a lot of different information, different terms to explain what the market's doing. So I just wanted you guys to know that. I wanted you to share that with you. So here with the fibs, the concept is that the market will sell down, pull back for the reasons I've told you. And then we're like, well, where would it pull back to? Like, how do you know how far it will pull back to? And that's where the fib analysis comes into, is that these numbers here, 61.8 and the 50%, this is the ideal zone where the market normally will pull back to. Now, it may go up even higher up into this area, the 88.6 to 78. It may come all the way back up this high, like might want to retest back up to 87 in this channel. I'm just doing the channel. We're doing a short term. We're just taking a snapshot. So, um, she might pull up a little bit harder before she sells down. And then what happens here is people, traders, businesses, big money, bots, all are putting eyes on this zone because the overall accomplishment is for price to come up to this zone, come up to here, and then make its way back down to continue with the trend. And then right here is where I put my TP zone at. Right there is where I'm going.
Guess what? Guess what?
So that's the rhythm and that's the flow of the fibs. Okay, so you put your fib on. So let's say I put my fib on and I'm like, okay, well, I noticed that it's at a great location. I was saying it's at the top of the channel. And if it sells down, I'm going to have a TP to right here. I'll have my stop loss above the channel. Um, we were saying above the 200, and look where the 200 lays at. Let me go. I kind of want to keep that drawing on there. The 200, if you look with me, comes right into that section of. We'll have to take that off, aren't we? Oops, I hit the wrong control. The 200 comes right here up at the last line of defense. So that's an area where the market should turn around. So it all aligns nicely together, all this information like, hey, we're at the top of the channel. She told me to put, you could put your stop loss above here. I'm not a financial advisor. This is for educational purposes only. Um, but I'm just sharing with you what the move is, how you could play the move. But this 200 comes right in line with the area where the market should turn around, as well as your 50. So it's a really great, remember I was using that word confluence, kind of a combination of different information that you compile together as a trader to say, hey, is this trade ready? Is this a good trade for me to take? So for me, what I'm looking for is her to move up a little bit more as she would, and then take the sell back down. Let's see how much it is too. So it's only 1,200 points more of a move back up before she sells down. So my reward if she continues to sell, obviously I would manage it, but we got a nice risk to reward on our shoulders here, down here to the 11.5. That's the 6,000 TP reward for if I got in now, it was only like 1,500 points to the top of that channel. So maybe you don't have time to look at the charts all day or every other day, and you're like, you know what? I'm going to go ahead and take a swing trade. This could be a swing trade and see what she does and see if I'm able to get in. You could set alerts to let yourself know. But kind of getting away from myself, we had originally done the channel. We had originally made this channel, and then with the channel, I wanted to identify where the fib was at. I wanted to see where the fib lied within this channel. So we're at a great location as well. We are at the heartbeat zone. Price is at the heartbeat zone. Let's go ahead and put my heart there. The heartbeat zone is the area where price should normally consider turning around to go back in the direction it was going. All right. And then this is the area that could be a potential TP zone, right back down to the 11.5. Okay. And then we have our last line of defense. Let's put that up there. And that's the area that the market may turn around. Okay. Supply and demand zone. Other people may call it that. They call it the supply and demand zone. Some call it liquidity pockets, grabs, what have you. But this is area where it's a great area if the market wants to keep control of the trend, they really need to appear here, and they usually do. So remember I was sharing with you how to name your elements that you put on your chart in your object tree of TradingView. We did that with the channel. So now I'm going to show you how I identify the fib. And what I like about this, traders, what I like about this is that you get yourself, I have this one chart, it's called my fibs chart for Bitcoin, and it has the day, the week, the 4 hour, the 5 minute, the 15 minute, all the different time frames over the years of me tracking Bitcoin. And I like it because I'm that type of person where I like collecting information to be able to look at from the past. So I like it for that reason. It's really interesting to me. You get to see how the market moves, and you also gain confidence in these tools in fibs, channels, levels, support and resistance, and how they all hold true, which gives me more confidence when I'm trading. When I first started out, like, wow, these channels pretty much on 80% of the time, the market responds to them really well. So I like to look at that information. Another good thing it is for you for traders is, show me your pudding, show me the beef, right? Let me see your fruit, you know. You say you trade, so show me some evidence. It's a good um, proof of work. Proof of work. So if I were to go and apply at a job that they are hiring for traders, maybe work for a prop firm or something. I could have some proof of work that would show all of my trades that I have taken over the years. So that's another good thing. Those are the good two things that I like about it. So, um, just something really good to do. I like to do it. So, in order to name this fib, what I would do is I go over to my object tree, which is to the right, and you click on it. And then, same as the channel, I identify where I started the fib, which was high to low. So that was on March 27th. If you look down at the bottom, you'll see the black information that this was the high on March 27th, Thursday, the 25th. So I'm going to write that down. I'm going to hit rename. And then I'm going to say March 27th. So it's 3/27/25. This is the day. It's the day. And then it's high to low fib, because I went to from the highest point to the lowest point currently, fib. And then I like to enter when I made this information, 25. And then I click enter on my keyboard, and it kept that. Now, these areas that are symbolizing the different zones on this fib, this is the heartbeat zone, this is the last line defense, and this is your take profit zone. I like to, they all go together. They're all part of a group. So what I do is I rename, and then I go like this. You can just watch. This is going to be the heartbeat zone. Okay. And then this was our take profit zone. TP zone. And I know then that was a high to low fib. Actually, I did this incorrect. I'm sorry. I want the day, and then I identify what it was. Yeah, I just messed up on this one. Okay. And then this last piece, this last one, the last side defense, that is, we're going to identify that. And then these all three go together because they all belong to that fib that we did. And as you build this out, and as we build this out together, you'll see how it looks so cool. This is not our TP zone. This is the last line of defense. Now you could abbreviate it if you want, but I don't, because you never know what happens. You come back years later, someone else will look at your work and they'll be like, last line, um, last line of they'll be like LLF. What the heck's that mean? You know? So I write it out. All right. Now, what else? Okay, so we know that price is at the heartbeat zone, so it's a great entry. We see where our last line defense is. We see where we could put our stop loss at. Let's look at the health of the candle real quick. Remind ourselves what that looks like. Okay, low, got 3 bars. See how much room is she still buying up? Still buying up, so still a lot more room to go up. So she may continue going up. Um, so maybe you wanna wait. I don't know. It's how you trade. If you wanna wait till she gets to the top and then consider the sell, that's obviously much better because you're not going to have the trade go against you. But at the same time, Bitcoin could, halt here and turn around because we are almost at the top of that channel. So those are kind of how you put those pieces together. So let's go down and we'll do the 4 hour And then that will be our session for today. Oh, you know what? I didn't realize I haven't been sharing my screen. Goodness gracious. I'm sorry. Maybe we need to go back and show whatever I missed. Hold on, sorry. I hope I was showing that object tree that whole time. Goodness, if I wasn't. Sorry. Here's the object tree where we were naming the fibs. Okay. Maybe let me just rerun that. So here's our initial fib, high to low, right here. Okay, I'm going to put it on line so you can see it. Started here, and then I rename, and then I put the information in. Then I copy this, Control C on my keyboard. I click on the heart that identified the heartbeat zone, and I hit rename, and then I paste it in there, and then I just type in the word heartbeat zone. Then I click on the exclamation mark, which is a symbol for the last line defense zone. And what I'll do is I'll take that out so you can see what I'm talking about. Control C. So what I'll do is I'll remove this so you can see what it maybe, I think what it will say on yours, it would say icon. So you click on it and then I hit rename and I press Control V. Now it says last line of defense because I just changed it, but I had copied it from the take profit zone. So initially it said take profit, but I just backspaced that out and put actually what this symbol represents, which is the last line of defense. So you may be like, what the heck is last line defense? Last line of defense is where the people in control of the market, the sellers, should show up and regain control. Sort of like in soccer. My really good trader friend, Keisha, she used that term. So I got that term from her. And the market really responds really well there. Also known as the supply zone, supply, your demand zone, sell zone, liquidity area. I mean, it all have the same amount of names, just depending on what type of trading you're doing. But it's really good to know that they kind of all represent the same thing. Okay, so let's go down to the 4 hour. We'll do the 4 hour. We'll do the same thing. We'll identify what's going on in the 4 hour, and then that'll be our session for today. Okay. Um, Finally, glad that I was able to get everything all set up. It's been over. Goodness, it's been like I think the last time I did a Bitcoin market analysis was about two years ago. Good lord. But let's not focus on the negative. Let's focus on the positive. So let's do what's going on. Let's look at what's going on the 4 hour. Let's look at what's going on the 4 hour. A lot of good info here. So we see that these are called pivot levels. What do pivot levels mean? Pivot levels are areas of support and resistance from the prior high close and all that good stuff. Has a whole formula. I'll get into that with you next week. We'll break that down. But they basically are areas of support and resistance based on the last prior day close, candles, and all that good stuff. So I really like using them. My prior mentor um, that I learned to trade from had taught us how off of these zones. So some people, they don't even have them on them. When what you'll notice is these zones are really, um, where the market had reversed or found support or found support here, found resistance here. It went up, couldn't go anymore, sold down, stopped here, and this happened to be at the S0. But it also, people who don't have this indicator on their chart will just see it plainly they'll just see it like this. Let me show you. Okay. They'll just see a naked chart and be like, oh, this is the next zone of where that's at. Or up here, they'll be like, okay, like for instance, right here. If they didn't have those numbers on there, they'd be like, okay, if she breaks this zone, she's going up here. Well, up here is actually a pivot level. Let's see what level it is. Oh, it's like right at the R8. So um, people who don't have this information just trade the naked charts. That's fine too. But there's so much more behind what's going on when if you implement these different types of indicators. It's just another stack. Remember, we were talking about confluence earlier? It's just another stack of confirmation of what you expect the market to do at these zones. So it's really helpful. It's like, let's think about it. It's like, hey, someone calls you up, hey, like tonight maybe. Hey, Anna, you want to go up to Welling Park and hang out? Uh, I'm not sure. Maybe. I'd like to go out to dinner. But maybe. Or they'll be like, "Hey, you want to go up to William Park? They're gonna have a good band up there. They're gonna be playing. They're giving away giveaways. Your one friend's gonna be there, or your other girlfriend's gonna be there. A bunch of friends are gonna be there. I don't know, something that makes it more enticing for me to want to go. I'd be like, well, maybe I might go up there and let me see how my day's going. Um, Very similar to that type of concept where if you don't have this information on here, you might not see as much or know as much and the reasons behind that makes the market even more interesting and reveals more information to you. At least for me, when I have these different uh, information indicators on here. Okay, so let's go ahead and just kind of dig into this time frame, see what's going on. Let's just pretend I'm going to pretend I just came into it. I'm looking at it. I'm seeing it sitting on the 200, so I know it needs to break this zone. Very good, strong zone. So then the next thought of mine is, oh, I want to see what those candles look like. Nice, strong, healthy candle. And we're on the 4 hours. So another thing that tells me that, let's see, that says 20. Hmm. Oh, okay, because I thought today was Friday. Like, how is it 28 o'clock um, already? But that was yesterday. We're on the 4 hour. Okay, so right here was a beautiful entry, is what I see. Beautiful entry right here. Do you see it too? Look at that. Goodness gracious. Makes me wonder what I was doing. I was head off yesterday. Great entry right here, traders. Look at that. What I see is a great entry. Stop loss. Obviously, in retrospect, stop loss would be, mm, I would put my stop loss maybe down to here. That's 1,000 point stop loss. I'd have to see what's on the 1 hour. I could do that one or I could see if I did let's say, well, there's a couple things here. If you got in on this trade, you couldn't put your stop loss on the last wick here because this one, if you got in after it closed, it went below. So that wouldn't make sense. You'd have to go to the next candle close, which is down to here if you want to, or go to a lower time frame and find something. Or you could use the pivot level. This is great support and resistance levels too. You could use that as your stop loss. Um, but you're in, oh, great entry. Look at that. Even if you did use that as your stop loss, this S2, that's only 500 point stop loss, and you didn't even use it. Oh, what a great trade. What a great trade right there. Look at that. If you got in here, you got in on the second candle. I usually get in on the second candle. And then put your stop loss right here. I'll be kind of bummed out having to go kind of low, but you could use your pivot level because that is a support and resistance level. And look, right now you're already at a 3-to-1 risk to reward. You could say you didn't know all this was going to happen, and let's say you had just gotten in, you'd be like, okay, I can TP to here, or I can take it all the way up to the 200. This could be your options if you got into this trade. If you went just to right here to the next support level, remember, because those are of some of our naked traders are just going from zone to zone. So they might just stop there. If you did that trade and had your stop loss here, that is a 2-to-1. Still a great trade. Ugh, so glad I'm getting back into my daily analysis we'll be doing because
Guess what?
good stuff going on. Great entry right there yesterday. And then if you went up to here to the 200, that's a good zone you could stop at. That then gives you a almost 3.5 risk to reward. And look, you did not even use any of your, um, you didn't use any of your stop loss. You did not use any of your stop loss. What? So that was even better. You use any of your stop loss. It never wicked down. You got in on that second candle. Let me see here. Got in on this doji. I would get in on that doji too, traders. Some people won't. They'll wait on the next one. But you might have missed all that with the late entry. Just put your stop loss right there. And that was a really nice trade. Okay, so the next thing that I also see is the run. Remember when I was talking with you earlier about the market movement? Well, these candles, and I'll show them in just a second, but they were 1, 2, 3, 4, 5 bar run. So on average, in order to keep that rhythm in the market will go up, come back down so other people can join in, catch the move of the trend. Maybe some people took the first movement of momentum on the lower time frames and they were good. They closed their trade. You see that pullback. Then it can be, adding to the rhythm of the market. All right. So here we see a nice one, two, three, four, 5 bar run instead of 3. Okay. So I know that this was a nice rhythm. There was a lot of nice buying there. So this tells me that that's a nice move. It probably could be done because we keep up with that rhythm and that dance, 3 to 5 bars, sometimes 8, but at least for me as a trader, I know, okay, that's a done rhythm there. It's a done dance. She's like, all right, now who else wants to dance with me? So she might pull back a little bit. I don't expect it anymore. So that's another thing that sticks out to me. Let's see what else. What else of confluences? Remember, a combination of different information from the market that it can tell us. Obviously, this red line, that's our 200 EMA on the 4 hour. So that's the average of your last four, I was going to say 400, the last of your 200 candles, the average of it, and then it'll put it in a nice line for you. And then this identifies the market's trend. So right now, the market, Bitcoin, my girl is like, girl, I'm ready to switch trend. I'm almost ready to change trend. If she breaks above here, then technically, instead of selling, which is the yellow, represents you're in selling trend, she may switch trend and continue to buy up. So that's another identifier that's sticking out at me, that she's running up right on this zone here, the 200 EMA. That is a strong area where the market would be like, "Woo, okay, I'm done. You told me I'd dance for 5 rounds. I'm tired. I did a nice run up. I need to pull back, let others join in." And I could expect to see some type of rejection here. Let's see our momentum. The last thing we'll check. Oh, we do have to do a fib though. Darn it and all. We'll do the fib and the channel, and then that's it. Let's check our momentum. Our momentum says, it's like the price is right. Not the price is right, but that one with the one where they flipped the things back in the day on the TV show. Um anyway, so we still have strong momentum, still buying up, so we'll see if she's tired here. And let's do a channel. Remember we did the channel on the day. So we're going to do a channel. Now, when you draw your channels, you can, normally they'll teach you draw them in the direction of the trend. As you get more advanced, you can do it the opposite way because there's a lot of information that you can learn from it going the opposite way too. And we'll get into that. 4-hour ascending. So I'm going to pick the one that is my 4-hour. So that's good. Now we did miss the ideal entry. See how it came down here on April 10th, well, it was yesterday, and retested and then took off. So that tells me that, okay, Anna, you're late. Another confirmation you were late. And getting ready to hit the middle of the channel, which makes sense because our 200's there as well. So more confluence, more combination of information put together, telling us what the market could possibly do, or if you want to go in and get your trade or not. So here I would be hesitating because I have my 200 EMA here and I have the middle of the channel as well. This middle of the channel is also support resistance. So that's important to know as well. So it could go ahead and reject. And now I'm going to take this off. And I took it off because I don't want it to cloud my thoughts when I make my fib. Now, if I do a fib, low to high, because the market is buying, right? Well, we got to make sure we put it on the right time frame. So we got to find our 4-hour, look for the 4-hour and go low to high. And then we'll make this 14 larger and we'll make this red because it's the 4-hour. And we're okay. Okay. Now we did a low to high fib, and remember we want the market to come back down to the area that it normally comes back, pulls back to, it traces back to. Remember we talked about that? The heartbeat zone. So here's our heartbeat zone right in here between the 50, 61.8. But we need to make it red because we're on the 4-hour time frame. And then do you remember the other icon we used to identify our TP zone? It was the check mark. Check mark. Oh, and look at this. The check mark is right above the 200 where we were going to take profit to when we were talking earlier. See how this combination of information falls together? So and then we need to identify our last line defense. Uh-oh, the area where the buyers, if it falls back this hard, they need to come up here, start putting their orders in to take over and continue with the trend of the control of the trend. So basically, this is what we're looking to happen. It hasn't done it yet. It ran up, and then it needs to come back into this heartbeat zone area, right? And then we would look for it to come back up to here, to the TP zone. Okay, that's what we're looking for it to happen. But you'll notice it hasn't even turned around yet. It hasn't turned around yet. So this fib is still, I'm learning where it could pull back to. When I pull a fib this way, right? When I make that fib like that, I am interested in where the market could pull back to. Where's that zone at? All right. That's why I did that like that. That's where I'm looking for the market that it could possibly pull back to. So it could pull back into this zone. And then let's measure how far of that pullback is. Oh, it's 5,000 points. Good Lord. So if she does pull back here, that would be really good for us because then we can get back in and take it up to this zone's 11.5. But it hasn't done this move yet. This is just looking ahead. Okay. Looking ahead. So I'll take that off. Oops, Control Z. And I'll take this off. So now what we'll do is we will mark up this fib in our object tree. I hit rename. So you notice when you make a fib for a trading view, it'll call it a fib retracement because I pulled it from over here in my drawing tools. So I click on it, I hover over it where I find the low. It was April 8th. So I go over, I click rename now over here in the object tree on your right. And I do 4825. This is the time frame, which is the 4 hour. And then it's a low to high fib. That's what I made. And I made it today, which is 41125. Enter. Okay. Now we need to remember that all these pieces go together with this fib. So I'm going to rename and just copy what I wrote and then just add in some more information to what identifies this zone. I'm going to take that word icon out. It's the heart. So it's the heartbeat zone of the 4 hour for this fib. Heartbeat zone. I could click the L off of there. And then I'm going to Control C that. And then I'm going to identify my take profit zone. Here's our take profit at 82,000. And these fibs, traders, oh my gosh, they really do work like fire. You just have to see if you can hold the trade for it to get there, or if it fits within your risk management. 4 hour, this is the TP zone, take profit zone. And then our last one, the last line of defense. So I rename, I take that out, hit Control V, and it's not the heartbeat anymore. It's the last line of defense zone where the buyers need to show up if the market gets pulled down that low in order to keep the trend going. But for me, I'm like, okay, the market should turn around here. I should get a great entry. Also known as your demand zone, where you would go to enter to take the buy up. Okay. Let's see what else. So now we have two fibs. We have the 4 hour time frame, then we have the day time frame. So this is what I wanted to show you. This is how you can organize and build out your object tree. So what we're going to do is I'm going to show you how I make a fib folder that will hold all of my fibs for the day, and then we'll make another folder for all our 4 hour fibs. So let me show you how I do that. Here's our day. You don't see them because I'm not on the day. Let me go to the day. That might make more sense. Okay, here's our day. Here's our day data in our object tree. So I click on it. Press my shift down. I'm using Windows. I hold all of my day elements. I want to make sure that channel wasn't in there. And then you right click and you select create a group of drawings. Then it puts all of those elements into a folder called group. Then I change this group name and I say day fibs. And this is my BTC live stream chart. I put the chart it is. And then the date that I made this folder. That's how I do it. Then what you can do is hide it. Well, first I like to lock all these elements so they don't move around. And then if you press the collapse button, you don't see all of it, but it's all stuck inside there. Isn't that cool? Okay. Now, if I want to hide all of this quickly, I can hit hide and look, they all go away. Now, I didn't put my channel in there because this folder, I'm going to use it just for my fibs, just for my fibs. And then make a channel. I'll make a folder that says my channels. But okay. Now let's go down to the 4-hour. We're going to do the same thing with the 4-hour. We're going to make a new folder, put all of put all of the elements that belong to our 4-hour fib into that folder. It's already identified. So then tomorrow, or maybe not tomorrow because the market might not, that fib may still be using tomorrow. Monday, we'll do another 4-hour fib and we'll add it into that folder. Okay. So let's click on the fib. Here's the fib. And then I click on all the elements. I'm holding my shift key down. I'm using Windows. Then I let go. They're all selected. Then I right click with my mouse and I say create group. So now it put all of those elements in this group, this folder called group 1. I rename this folder and this is going to hold all of my 4-hour fibs for my BTC live stream chart, because it will be based off of your chart that you have up there that this object tree will be tied to. Okay. Then I'm going to lock all. If you hit the lock button, it will lock everything in that chart. If you hit the hide button, then it will hide everything in that chart. See, look at that. Hide, or you can unhide it. All right, so now we have everything in that folder. So we have a day folder and a 4-hour folder. So now we're a lot more organized. We don't have, like here you see in my object tree, I got all different types of information in here. They're not put into their own respective folders. And this can really get out of control. It can get really out of control. And if you're that type of person where you're like, oh my gosh, I have no idea where what is and what is this and what is that. And you're learning to be a good trader, you want to go ahead and keep yourself organized. Just like if you're an electrician or whatever, you got a van where you carry your materials. You put them in a certain place so you know where they are. If your helper wants to go and help you, you just tell them, hey, it's in the back on the left hand side on this drawer. This is the same thing. Same thing. Okay, so to close the object tree, you just click on the icon and it will close it. All right. Well, that was a great session. I'm trying to see. Oh, an hour. Okay, that was an hour session. That was good. Thank you for joining me on the DeShields with Visual Silence Technology, trader and coach. If you're looking to know a little bit more or a lot more about trading, please reach out to me. Visit me also. Follow me. Support me on my Instagram. It's Anna Coach Trader. Check out my website, www.annadishields.com, for the different opportunities that you can take advantage of to become a better trader. And I'll see you in the charts. Thanks, traders. Bye bye.